Good afternoon. This is Keith Brown in Moultrie, Georgia, with some cash commodity commentary for Tuesday. It's about 4:25 Eastern Time, running behind just a little bit today, and we're sorry for that. Anyway, cotton was very bizarre in that it did indeed continue to trade higher, despite the fact that its fundamentals are bearish, despite the fact that outside markets were tumbling pretty hard, particularly beans and corn. The fact that the dollar was higher today, and the big fact as we came down the interstate returning from our trip, that all they talked about in the business channels was perhaps that China was on the verge of imploding economically, and yet cotton closed today above 76 cents. That is a little significant in that it's the first time this month we've closed above 76 cents, and now we really stand 147 points or so from knocking out the high of the whole move, 77.49. If we do that, it looks like to me we'd want to trade higher. A lot of people, us included to some degree, are trying to scramble around trying to find the why of this, and maybe we shouldn't be doing that. Maybe we should just recognize the fact the market is not wanting to break and take advantage of that by having our fixation orders in above the market in case it does somehow gyrate higher, or at least keep tabs on it from the day to day as to where it is and how it plays out in our marketing scheme. Suffice to say, if you're one of those people that need to have some kind of fundamental reason as to why, I still think it relates to the fact that with high-priced grains, we may not plant an acre of cotton in the world next year. So that being the case, December 12 cotton could certainly run to $1, and that would give more validation for this nearby cotton to be worth more, particularly since half the cotton in the world, although record 75 million bales, I'd say half that cotton is in the hands of India and China, and therefore would not be put out on the open market. I guess unless the Chinese market were to implode, they would want to raise capital by selling cotton, but I somehow don't think that's going to be the case. China's been through worse events than this in her storied 5,000-year history. At any rate, grains today continue to break. Corn and beans, it's harvest time. We expected this. We've talked about it. I think the bull move there is not over, but certainly we could do a little more washout in here in the grain markets. Maybe 20, 30, 40 cents down more in the beans. Maybe 10, 15 cents lower in the corn. Wheat too broke some today, although wheat did get close to that. We did some cash pricing up there at 8.75, and we were certainly glad we could do that and even a little higher. So fuel today fell out of bed, which looks like to me it might still want to continue to do that, but we'll see what tomorrow brings. Now, middle of the week, of course, I think we may see grains try to pop up some tomorrow, but I think the near-term trend is to have the market under pressure, so we'll see. If you have any questions or comments, of course, give us a call, 1-800-910-1910. Thanks for listening.